There you go.
Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on September the 24th, 2017. In this edition of your weekend video newsletter, we'll discuss the indices and where they might be headed, with the S&P 500 up 11.76% year to date, finishing up the third quarter shortly. We have the NASDAQ up 21.97%. The market cycles are still up, though they are at extremes, and a possible turn is coming. So we'll start to look for that change of trend and position accordingly. Junk bonds are up 5.98%, so that's sort of a caveat for the bears, in that junk bonds have been leading the markets higher all year long. Bond stock ratio is still bullish as it's dropping. The Dow Composite is at a point where it has paused. We saw a doji on Friday in the current uptrend. Institutional sentiment, however, we see the New York Stock Exchange and the comp both at highs. Their bullish trends persist, so institutions are buying more stocks than they're selling at the present time. And the NYHL has a moving average that is bullish in its cycle. The histogram is fading somewhat, so we'll have to keep an eye on that very closely. High-low percent is at 92%, very near the extremes at 95, where we've seen turns before. And we have the NYAD trending and bullish, which is another caveat for the bears. Put-call ratio is trending towards bullish. Last week we didn't manage to move lower, and that presents something of a catalyst for the bulls if we can see the put-call ratio continuing to move higher along with other indicators. VIX is at 959, under the 50-period moving average, frustrating a lot of bears as it continues to move lower unabated. VIX VXV is in the red zone. I did study that a bit this weekend. VIX VXV can stay in the red zone for some time and still not affect price action. The US dollar is at 91.97 and it's flat. As long as it stays weak, that's good for multinational companies that trade in US dollars overseas. And the yen is trending and bearish at the present time, below its 9 and 20 EMA. Yields spiked higher over the last couple of weeks. AGG and TLT are above their 50-period moving averages. Junk bonds, as we said, are still bullish for equities. Gold faded, copper faded. We saw a hammer last week, and that presents a potential buy point. We have West Texas crude with the doji. It was slightly higher last week as well. 8 weeks, still looking for a breakout one way or another. The heat map rotation is still bullish. The heat map saw rotation last week. International markets, there are some red in the Southeast Asia group. Japan, South Korea, and Italy did very well last week. Starting to see some improvement there. We'll look at these IBD 50 names and some other stocks from previous watch lists. Keep an eye on telecom. They were very hot last week with Verizon, AT&T, Sprint, T-Mobile, and many other names in the group following through on some of their trends. Bukowski showing 4 or 5 of his signals are green. Since 824, the CPI signal has been green as well. It's at 66.5% and bullish, with 53 bearish setups, 105 bullish setups, and 227 bullish patterns waiting for breakout. Let's analyze the S&P 500 spiders for a moment. Price action is near all-time highs once again. We peaked out last week at 250.19 on Wednesday. We came back down, tested the 9 EMA, Thursday and Friday and closed above it. We have a very large volume by price support level and a breakout level. That's something to consider. The 9, 20, and 50 are all climbing. We are in an uptrend. And if we draw a parallel line up here, we're pretty much in an ascending channel pattern. Stochastics had turned over, and on the test lower, Wednesday, Thursday, Friday, we did see below average volume. With stochastics moving lower, we're watching MACD if the momentum can continue. But most importantly, once again, as we like to point out every week, as long as tick cumulative is rising, institutions are buying more stocks on the uptick than they're selling on the downtick. This is a very important thing to note. If you're bearish, this indicator needs to turn down. The only way this can rise is if the institutions are actively buying more than they're selling. And if you couple that with breadth, the New York Stock Exchange advanced decline, rising, you have all three: price, sentiment, and breadth, bullish at the present time. That said, if we look at the S&P 500 in its cycle, we do note that we're at a peak and have turned. Now what this can tell you is what happened back here in late July. We moved sideways for another week before we moved lower. This period right in here for this week could be distribution, and we could see that rotation and distribution take effect again this week, the last week of September, before moving lower, which gives us time to exit some of our winning positions and some of our losers as well, and start to look for a move back down to the 9 and 20. Now that's an assumption that needs to be backed up by price. For now, we're assuming it'll be something similar to what we saw in July, and also back here in May, where price action moves sideways before moving lower. Ultimately, we did move higher, so keep an eye on the 50-period moving average. As long as that keeps climbing, more than likely, as we enter the best months of the trading year, as neither the 50 nor the 200 are turning or flattening at this time. So if we just look at the NYSE, for example, going back to 2015, we had flat 50 and 200 period moving averages. Prior to the election, the 50 had turned down markedly, yet the 200 continued to move higher. And presently, we see the New York Stock Exchange composite of 2,000 stocks indicating the 50-period moving average climbing along with the 200 period. So overall, the markets are bullish long term. Short term, we could see some distribution and a little pullback into the end of the quarter and a resumption of trend going into year end, as we can see in the S&P 500 monthly chart as well. The things to point out here are the divergences in RSI. RSI is strong, whereas in 2000 and in 2007, 2008, those were moving lower. In addition to MACD, which is moving higher, it was moving lower both in 2000 and 2007. In addition to STO, which was moving lower, we're moving higher in embedded, and the New York Stock Exchange advanced decline, which was moving lower prior to 2000 and 2007 at market tops. Right now, the New York Stock Exchange advanced decline continues to climb. That can't happen unless they are more bullish than bearish long term. Looking at the NASDAQ 100, we're anticipating we could see an overshoot of the 50 period as we've seen previously back here in August. But the 50 is still climbing. A-Rune is giving us a bullish setup. A-Rune up remains above 70. A-Rune down continues to trend lower, which is telling you the majority of stocks in the NASDAQ 100 giving us a bullish follow-through indication into year end. Short term, we do have some caveats. We do need to get back above the 9 and 20. We've trended lower all week, so we'll be looking for some setups there. Most importantly, again, tick Q for the NASDAQ 100 is rising. Stow is set up in the green zone, ready to turn, and MACD has crossed. So it looks like the setup into this week could be a chip shot into the hole. Small caps gave us a bullish trend for the last month. We are above the 9 and 20. We're at a previous high. The 144.25 zone could be a double top. We'll know it if we see small caps in the biotech and the oil and gas group, which did well last week and the week before, starting to roll over. So that'll be a first sign of a risk-off move. However, if they do continue higher, watch for those same oil and gas names and biotechs to move higher, along with the IWM. We have major support down below in volume by price. In addition, we have above average volume. Note the volume that has been coming in all this time, above average. MACD is above its signal line, showing the bulls are in control and Stow is embedded. The takeaway is this: if small caps continue higher, risk on is the trade into the end of the year. Here is a chart of NYSE at all-time highs, above its moving averages, volume by price support, RSI showing muscle. Most importantly, the high-low percent, the difference between 52-week highs and 52-week lows, continues to climb. Breadth is expanding. In order for that to happen, in addition to the New York Stock Exchange advanced decline, we are at extremes. So there is the proposition that we could turn back down, head towards the 9 EMA at a minimum in the short term before moving higher. The McClellan oscillator for the NASDAQ is still in an uptrend. We could be putting in a cycle high, but we'll have to look for that to turn first. Price action did pull back. Could be some distribution, as we mentioned previously, on the NASDAQ 100. Ultimately, breadth continues higher. So the trend for now is up until this cycle peaks and starts to turn dramatically, like we saw back here in late December. That still didn't give us a reason to get too bearish, as price action did just move sideways, dipped briefly, and continued on with its 50-period moving average, pointing the way. The McClellan oscillator for the New York Stock Exchange Composite of 2,000 stocks gives us the same picture. The upcycle continues, and until we see this start to roll over, we can't assume that price action is going to move lower as well. We did peak back here in late December. Even still, price action just dipped slightly before continuing on with its rising 50 and 200 period moving averages. The NYSE NYSE summation values continues to point higher. That's also bullish. Here is the bond stock ratio between the 10-year UST and the S&P 500. As long as this red line continues to drop, that's bullish equities long term. The moving average 65 period is also moving lower. Why the 65 period? Because it is 1/4 of a year. Take 250 trading days divided by 4, and you come up with roughly 65 trading days. That said, we do have a position in AGG and TLT, both of which are below their moving averages at the present time. We're watching for Stow as it turns back up to indicate whether or not we are going to follow through back above those moving averages. For now, we're just holding our position as a hedge in case the market does start to cycle down, as previously mentioned. And TLT basically painting the same picture. Price action is sitting right above the 50-period moving average. We did take a new position in TLT on Friday, anticipating this could be a bounce. So if the markets do start to show some weakness over the next couple of weeks, this could bounce and follow through. So this is a short-term hedge, a short-term long in bonds off of extremes, maybe some mean reversion, with Stow moving higher and looking for MACD to turn back up. Overall, long term, we feel like equities will be higher November and December by year end. So we'll likely be taking profits over the next couple of weeks in TLT if this does bounce and head back towards 129. And finally, junk bonds, which as a takeaway, if you're bullish equities, you want to see junk bonds continue to push higher. That's the case. Until that changes, we would be long equities as traders continue to show an appetite for risk. US dollar has been moving lower. As we enter into the next earnings season, we'll be watching this very closely as multinational companies that have international operations that report in US dollars, they'll see a bullish tendency going forward in their stock price and in their projections. So watch the US dollar. If this continues to move lower, that would actually be bullish for equities. For now, we're holding underneath the 10-period EMA and the 50-period overhead. 200-period is turning over, so we are in a continuation of a bearish trend. If you're trading commodities, that's good for your positions, as gold, crude, copper, silver, etc. should continue to move higher in the long term. Copper showed something of a hammer off the lower Bollinger Band. We do have the moving averages overhead now, so we have to be cognizant of that fact. We do have volume by price support. We're looking for a higher low. Overlaying the 50-period moving average, we can also see that price action stopped right at the 50-period moving average, found buyers. The 200 is much lower. I really don't think we're going to pull back that far, especially considering the hurricanes and all of the demand related to rebuilding efforts that will likely impact price, supply, and demand. Gold also pulled back to the 50-period moving average, volume by price support, previous breakout levels. Stochastic is nearly set up for a bullish reversal. MACD should turn with price as a function of same, and stochastics is oversold and turning. Look for a bounce in gold, especially if the US dollar remains weak or moves lower. Crude for the 8th straight week hasn't given us much to look at, though it is starting to make something of a turn back to the upside. We did have a doji last week with volume dissipating somewhat compared to previous weeks. Basically not much to see here on crude for an 8th week straight. We've seen sector rotation become evident. Materials continues to be strong, along with a lot of the names in oil, equipment, energy, exploration, and production. We also had some industrials, especially in aerospace and defense, doing well, and telecom services did well last week. So we're looking for a repeat. As more green does show up, it's just shifting on the sector heat map. Reflecting on international markets, so this is the first week we're seeing some give back in Brazil. We also had some weakness in Southeast Asia portions of the international markets, with Taiwan, Australia, etc. moving a bit lower. China had a double top that we pointed out on the weekly. Some of the countries that improved, Argentina, among others. Just pause the video and check those out if you're trading the international markets. Here is the IBD 50 in candle glance format. Note most of the stocks are above their 20 and 50 period moving average, the blue, red lines, respectively. We're looking for a push off of those levels or a follow through, a flag, or some such information to tell us that the bulls are present. We have CarMax new on the list. The stocks that are weak are very obvious in the REITs, utilities, and some of the consumer staples. Tech stocks did have some weakness last week, but we'll look for a follow through there. For the majority of these, though, they're sitting above the 9 and 20 EMA. One stock that was on a previous watch list, GWRE, in the software and insurance related group, more than likely will continue higher with all of the claims coming out from the hurricanes and recent weather-related events, we should see this moving higher, building a nice flag above a previous breakout level. Bollinger Bands are fairly tight. RSI is rising. Doesn't report until the end of November. Increasing volume, MACD's turning, and stochastics is turning higher. So we're looking for a continuation day this week with a stop if it pulls back into Friday's price action. Moving on, the last part of the group, some of these names look pretty decent. Old Dominion Freight Lines, among others in the trucking group, were very strong last week, breaking out of patterns heading to fresh 52-week highs. Look for this whole group to continue higher as well. The 9 and 20 EMA are rising. There is potential for it to pull back or flag. However, this looks like it's going to continue rising above volume by price support, as volume indicates institutions are involved. Doesn't report until the end of October. MACD shows bulls are in control, and we have nice volume to boot. I would use the trade of the day setup for entry. If this one follows through, it'll be very clear on Monday morning. Some of the electronic processors like PayPal are also doing very well. Keep an eye on these names because they just continue to grind higher. Winnebago and YY are also on the watch list this week, looking for a follow-through on these names, breaking out, pushing off the 9 and 20 EMA. This is an entry back here on the last earnings in June. I believe earnings are on October 13th, so this one could run a bit more in the short term. As RSI shows muscle, increasing volume, MACD above its signal line and STO turning higher. This will likely continue through the week, so watch for your trade of the day setup for entry, exits, and stops. AEIS had a nice move off the 20 SMA from previous watch lists. This one's broke out, failed, came right back down, and now is building higher lows. RSI is turning back up. Doesn't report until the end of October. Watching for volume, MACD to remain above its signal line, and stochastics to turn back up. A follow-through day, we should test 78.85 level, take those bag holders out, and then continue on. If it gets above these volume by price levels, we'll have support below us, so our next target now is 78.85. Applied Materials is also back, showing us a flag, and starting to push off of this level on Friday. Look for RSI to continue higher. Major support down below, just north of 45.50. Doesn't report until the middle of November. Looking for volume, MACD to stay above its signal line, and stochastics to turn back up. Look for a follow-through day on Monday. Use the trade of the day setup for entry, exits, and stops. As RSI, SOTMA, and most everything about this chart suggests higher prices in the short term. ANET also looks good with RSI showing relative strength. Bollinger Bands opened up last week, following through above volume by price support levels. No overhead supply at this point. SOTMA continues to point to higher prices. Doesn't report until the 1st of November. MACD is above its signal line, increasing volume, and stochastics headed higher. This will probably head higher. There is a possibility of a move back to the 9 EMA, though I wouldn't count on it too much, as the buyers right here have shown up in the wicks at 185. So use your trade of the day setup for entry, exits, and stops, and look for higher prices this week. Corcept Therapeutics, this one's on our short list for stocks that could continue higher. Nice bullish action out of this flag. SOTMA is supportive. RSI is rising. We just need to check earnings on this one. Increasing volume, MACD's turning, and STO is pointing to higher prices. Look for a breakout this week. Use your trade of the day setup for entry, exit, and stops. Control 4 Corp, since being added to the S&P 600, just continues to press higher. Looks good. Broke out of this ascending triangle pattern. Pushes higher from 24.50, 25. tagged 29.66 last week. Look for a follow-through day on Monday. RSI showing muscle above volume by price bands, no overhead supply. Watching volume, this just continues to see bullish action. Stochastic needs to turn back up. MACD is above its signal line. More than likely, this will find its legs. We'll be watching for evidence of that on Monday. Use your trade of the day setup for entry, exits, and stops on this one as well, going into the week. Buy below is back on the list, holding the 20 SMA, building something of an ascending triangle pattern, looking for a breakout above 50.70. Take these bag holders out. Then you got this 51.52, 51.74 level to deal with. Once these guys are gone, then you got 53.91 in the short term. We just need to check earnings on this as stochastics moves higher. MACD is somewhat flat, so not my favorite setup, and we'd like to see more volume. But other than that, looks like a pretty bullish setup. If retail is strong this week again, as I'm anticipating it will be. CarMax is new on the list. It's been one we've been watching though. It did follow through on the breakout of this at 69. SOTMA is beginning to turn higher and higher. Look for a flag or pullback into Friday's price action as a potential entry point. Look for buyers to step up at the low of the day. Look for that ABCD pattern to give us an idea if they're present. I think they will be. Last time we spiked on volume, the stock rose from 63 to 67 in the next few weeks. This could turn out to be a decent trade as well. Again, if retail is strong, all of the things that need to be replaced from the damage from the hurricanes will affect a lot of these stocks. YY had a nice move last week. We took most of our profits off at the table. At 80, we're looking for this to break out. That could happen this week. I'm more than happy to buy at a higher level on a breakout. Even though over the last week it did pull back, we did manage to salvage a few trades and make a few bucks on YY. The daily chart looks good for a breakout above these levels, no overhead supply. More than likely going to take out 83 pretty easily. Having taken profits into Friday's action, this will probably break out. RSI is pointing and suggesting higher prices. Stochastics is turned up as well as MACD, about to break back above its signal line. And we'll have increasing volume, hopefully, with the stock reporting near the end of November. This looks like a pretty high probability setup going into Monday. Keep an eye on the defensive group as well, AJRD, Boeing, Lockheed Martin, among others. All of those stocks look pretty strong in the industrial sector as well as some names in telecom and also in the transports. Okay, traders, that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. I'll send out a watch list later this evening. I want to spend some time with the family. Get outside. It's beautiful. Enjoy your day. I'll send out the watch list later this evening along with some stocks that we're looking at trading prior to the opening bell on Monday. Take care. I'll talk to you soon.